If you own a rental in BC, 2026 is shaping up to be one of the most difficult years small landlords have ever faced. Vacancy rates in Vancouver just hit 3.7%, the highest we've seen since 1988. Rents on new leases are falling, and tenants are now having leverage for the first time in decades. Stick around till the end because I'll show you the one mistake forcing landlords to sell right now. And I'm saying this because the data is now confirming what I'm seeing every single week in Surrey, Langley, the Fraser Valley, and Greater Vancouver. Let's get straight into it. For most of the last decade, being a landlord in BC was pretty easy. There was low vacancy, rising rents, and appreciation covered almost every mistake. That environment is now gone, and 2026 is the year where small landlords are feeling it all at once. This is the stat that changed everything. According to CMHC's 2025 rental market report published in December 11th of 2025, the purpose-built rental vacancy rate in Vancouver hit 3.7%, the highest level since 1988. Let that sink in. We have not seen vacancy like this in nearly 40 years. Nationally, vacancy rose to 3.1%, which is now above the 10-year average. For years, landlords never had to compete, and now they do. And competition ends up changing everything. This is why vacancy matters more than interest rates. Most landlords are still focused on interest rates. That is old thinking. Vacancy is the real risk. Vacancy means no rent for months. Incentives feel like free rent. Higher turnover, more negotiating power for tenants, and the CMHC confirmed that landlords are now offering incentives again, including free months of rent and signing bonuses, something we just simply did not see during the 2021 to 2023 period. If you only rely on one tenant to carry your property, vacancy is not a statistic, it's a cash flow event. Next, we're going to talk about rents on new leases falling. This is one part that many landlords refuse to accept. CMHC data shows that turnover for rents for two-bedroom units declined in Vancouver, as well as Toronto, Calgary, and Halifax. That means when a tenant leaves, landlords are forced to lower the asking rent to stay competitive. Yes, average rents paid by all tenants still rose 5.1%, but that increase is driven by existing tenants, not new ones. That distinction matters because landlords don't get to reset rents easily anymore. Next, let's talk about how tenants have leverage again. For the first time in over a decade, tenants can shop. Vacancy rose across all rent levels, including the lowest price units, which is something CMHC has confirmed has not happened in over 10 years. And this tells us something important. The market didn't just soften at the top, it softened everywhere. Tenants are moving more. They're upgrading units. They're negotiating. And that power shift is subtle, but it's very real for most landlords. Next, let's move on to the condo rentals that are flooding the market. This is especially important for Langley and Surrey landlords. CMHC confirmed that in Vancouver and Toronto, a surge of condominium completions pushed many owners into the rental pool because the resale market was very weak. And that means more competition for tenants. In plain English, small landlords are now competing against brand new condos, investor-owned units, and purpose-built rentals all at once. If your unit is older, smaller, or poorly laid out, you will feel this first. Next, we're going to talk about how costs are not coming down. Here's the squeeze. Rents are softening, vacancy is rising, but costs are locked in. Mortgage renewals are higher, strata fees are rising, insurance is up, and property taxes are up again across most BC municipalities. So margins are shrinking on both sides. This is why so many landlords are calling me right now and saying the same thing, and it's that they didn't expect things to get this tight. At the end of the day, large rental operators can absorb this. However, small landlords cannot. If you own one condo, one basement suite, or one townhome, there's not really a buffer. One bad renewal changes the math, and that's why most of the investor listings I'm seeing right now are not strategic exits, they're pressure sales. This is what I'm seeing in Langley right now. So to get a little bit more local, in Willoughby and in Clayton, we're seeing heavy investor-owned condo supply, new rentals competing hard, tenants negotiating more aggressively, and in some buildings, landlords are quietly accepting lower rents than 12 months ago just to keep occupancy, and that's a massive shift. Here's what I'm seeing in Surrey right now. In Surrey City Centre and Fleetwood condos, we're seeing higher turnover, more rental listings sitting longer, owners switching from hold forever to sell now, and many of these owners are what I call accidental investors. So the accidental investor problem are people who upsized, moved for work, got married, left the province, and they kept the condo just in case. Now rents are soft, tenants are leaving, and the math just no longer works. And these sellers are not greedy, they're just exhausted. And exhausted sellers are creating opportunity. Next, we're going to talk about how the population growth just slowed hard. CMHC also confirmed something that most people missed, and that's rental demand slowed because population growth slowed sharply, especially among 15 to 34-year-olds. This is the primary renter demographic. In BC and Ontario, this group declined. Why? Lower immigration targets, fewer international students, weaker job growth for younger workers, and less demand plus more supply equals leverage shifting away from the landlords. So let's talk about why 2026 may be different. This is not a crash, this is a reset. And for the first time in years, supply is starting to catch up. Demand is normalizing and tenants are moving again. That combination exposes very weak assets. Moving on to the one mistake that's forcing landlords to sell. The biggest mistake landlords are making is waiting too long, because assuming things will go back to normal. They're assuming the rent growth will bail them out. They assume vacancy won't happen to them. And markets don't punish optimism, they punish delay. By the time most landlords decide to sell, they're already under pressure. So next, let's move on to when holding actually makes sense. Holding makes sense if your property cash flows, your strata is healthy, your tenant is stable, you can absorb vacancy, and that's discipline. Moving on to when selling is actually smart. Selling is smart if cash flow is negative, rents are capped, the strata risk is rising, and if you're emotionally attached, because holding a bad asset is not long-term thinking, it's hope. So what does this mean for buyers and investors? This environment does create opportunity. Landlord fatigue creates motivated sellers, better pricing, flexible terms, but only if you buy the right property. And not every deal is good. The gap between good and bad deals is widening very fast in this climate. What does this mean for families in Langley and Surrey? Investor sell-offs affect condo pricing, townhome supply, and rental availability, which reshapes neighborhoods. Understanding this shift can give you an edge whether you're buying, selling, or holding. So for final thoughts, being a landlord in BC is not over, but it is no longer passive. 2026 is going to reward clarity, discipline, timing, and it's really going to punish delay. So if you want a rental and you want a data-driven strategy, just shoot me a text at 604-288-7592. And if this helped you understand what's really happening in the BC rental market, hit like, subscribe, and I'll see you in the next one.